Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome back for another amazing episode of Bullish and Beyond, where we are bullish about all things stocks, crypto, and life. While we are always bullish long-term, there are a lot of short-term headwinds hitting the market this past week. We had a massive downtrend in the market, both in stocks and in crypto. You know, it got pretty overheated. There definitely was some overbought territory, and people thought the stocks had kind of ran up too high. So I believe a lot of it is sentiment driven, just that we're a little bit peaking in terms of valuations and euphoria leading towards the end of the year. And the other thing really weighing on the market is the fact that the government is still closed. So I'm not 100% sure, but I think once the government reopens, there's going to be a nice pop back in the markets. People are fearful of the flights getting shut down, other disruptions that are happening actively right now. So that is huge news when it turns to the positive. So be ready for that to happen. Also, when you're seeing these big downtrends, do not just sell away your shares. Be mindful of what you have that has true fundamentals and will come back, because they do. You know, when Nvidia and Apple sell down, I take that as an opportunity that we should be buying more. So these names that I've been talking about for a long time now, they have taken a huge hit. A lot of them have come down significantly. I mean, 30% this past week on some of these high volatility names that are not making money, like an Oklo, a Palantir, CoreWeave. You know, Oklo in particular took a massive hit. I think it's going to go back up long term. The downtrend, though, still could be continuing. We saw a little bit of an upswing towards the end of the market this week. So I'm recording this right now on Friday. The stocks are coming back up. So I do think we could have a positive next week. So some of the reasons why stocks trended down in a more individual stock basis. Let's start with Meta. Meta reported their earnings last week, and the biggest issue investors saw was the increase in CapEx that's coming. You know, Mark Zuckerberg, the CEO, has been talking a lot about how much CapEx they're spending to maintain their AI data centers and AI team. You know, they've been hiring AI people for insane amounts of money. Most notably, the Scale AI founder, they paid $19 billion for 50% of his business, basically just to get him and his team on board. And they've also hired a lot of people away from Apple. And they're offering these $100 million plus pay packages, just mind-blowing amounts for these AI researchers and scientists. And it's working for them to get them on board, but it's not working in terms of overall CapEx spend and market ideas, how the market feels about it, market sentiment. So what I'm seeing is that they are going to spend a ton. If it does work out, it'll be a very, very strong play for Meta to be crushing it in AI in the future. They could be one of the few companies at the helm with their publicly available model and having the largest social media sites in the entire world to plug this model into, and for us users to be able to get it and use it. So they have a lot of potential. I do not want to sell their stock. I think it's a buy after this dip. Took a massive dip. So that's what you have there with Meta. Another one we saw recently was Microsoft. Microsoft has been pretty volatile lately, but one thing I want to note that I'm very excited and bullish about is the fact that they finally made peace of OpenAI. And by that, I mean they came to a conclusion about how they want OpenAI to move forward as a for-profit company. And they were able to figure out a few things. One is that they were able to take their previous investment and turn that into a 27% stake in this newly formed for-profit entity. And that stake, that 27%, it's worth $135 billion. For some reason, it doesn't really seem like it made the stock move at all. I know that's Microsoft's a $4 trillion company roughly, so it's not necessarily a massive percent, but I just thought that would affect the stock a little bit one way or another. Not a whole lot of movement there, but I think that's great for the future because they are maintaining their ownership in the fastest growing AI company in the world while also having the ability to keep the IP through the year 2032 or until AGI comes out. And the biggest issue in the previous contract was the AGI portion. OpenAI, in theory, could have said they achieved AGI without any thorough, back check or any high confidence ratio. However, now to be able to prove AGI, there's an independent board. I don't know exactly who's going to be on that independent board. I don't believe it's even been formed yet. But in general, having an independent board is going to be huge. So they can't just, say we got AGI when they really don't. So that's going to be very interesting. In other AI news, Apple is going to be renting an AI model from Google. So they've been talking about this new Siri now for a long time. And frankly, it's a little bit overdue. But supposedly next April or so, they're going to be launching a big iOS update, and it's going to include this new Siri and this on-screen awareness. You'll be able to talk to your phone, it'll see everything that's happening and be much more dynamic, smart, and be able to follow on conversations, just like we expect AI to do these days, which unfortunately Siri does not do yet. So the idea is that Apple is going to be using Gemini, a private cloud instance. Apple is always about building trust and transparency. So there are two things it has to continue to maintain. And that's why I do love the company. They have a very strong trusted moat. So what they're going to do, they're going to get a private instance of Gemini, a massive custom model, and they're going to run that on Apple Cloud. And I don't believe Google's going to be getting that data. I could be wrong, but we'll find out more about that. Apple should maintain all the privacy of that data, and they'll be able to host that on their servers. For that, they're going to pay $1 billion a year, which if you think about it, it costs a ton to build one of these foundation models. So that's really not bad. So I actually like that as a play for Apple, not to go out and spend as much. For instance, Facebook is spending, Meta is spending way more than that to, increase their models with all their scientists. So $1 billion a year, not too bad. And pretty cool to see that they did it with Google. They're using Google to get all this search revenue and stuff like that from all the searches through Safari. So it makes sense to also form a partnership along these lines. So really cool to see that there. Another stock I would love to talk about is Tesla. I would have thought Tesla would have popped after the big news that hit the market yesterday. And that news is that Elon Musk's new pay package got approved to the tune of $1 trillion. Wow, that is 1 trillion with a T. But to hit that lofty target is an insane growth path ahead. So if Musk is on board and thinks he can do it, wow, we are going to be impressed, and it's going to be a great ride as a Tesla shareholder. I have a very large Tesla position. I am a big proponent, and I love it. I tell my friends all about Tesla all the time and why it's going to win. So what's going to happen now is that Musk is insanely incentivized to roll out the best AI and robotics inside of Tesla. He has to grow the company from about the 1.5 trillion it's at now to $8.5 trillion to get that $1 trillion pay package. And it comes in chunks as it grows. So maybe he can get half of it if it grows to 5 trillion, for example. But he also has to hit a certain number of cars. He has to sell 20 million cars, for example, and millions of robots. So these are not easy targets. But Musk is up to the challenge, and he has lofty goals. He's saying he's going to come out with a new line to start building the robots in his Fremont, California factory. And it's going to have about 100,000 a year robotic run rate for Optimus. And he's also going to build one in his Texas gigafactory that they can do about 1 million robots a year. Now what's surprising is he says they're probably going to need to make their own chip fab. Chip fab, really? That's really hardcore to do. I mean, you talk to someone like Jensen Huang and how difficult it is to spin up these new chips because he's doing it all the time working with TSM. and other companies out there like that. It is extremely difficult to build a chip factory, very long-term vision. Elon says these third parties do not have the capacity to build the chips he's going to need to be throwing down in all his robots and cars. I don't know if he's talking to the right people, though. I mean, Apple has 250 million devices a year that they're making, and they have all those chips come out more than fine. I think the chips are a little bit bigger that Elon is proposing inside of these robots and inside of his cars, so maybe that's part of the issue. But, first of all, he's using NVIDIA and TSM to build some of the current ones, and then he's using Samsung to build the next generation chip from there. So it could be a long-term play to build out this chip fab factory. Maybe this is a 10-year play or something like that, but it takes so long. I remember TSM, which I love and talk about this podcast all the time. It takes like 4 or 5 years to spin up these, massive chip fabs in Arizona, for example, and to get them, fully on speed and online. So at a bare minimum, if he broke ground tomorrow, it'd be in the 2030s. So it's going to be interesting to see if he does invest in building his own chip fab, because it's a massive, massive investment. Just to go on some comparable numbers, I think some of the factories that TSM builds are in the magnitude of 20 billion cash. So it's a lot of cash to build a chip fab. Could be a good long-term play if he can truly bring down the cost of his chips, and if he needs that type of scale. Elon Musk has lofty goals. I love him for it, but I don't know how many years it's going to take until we're making, hundreds of millions of robots a year. He thinks that could be a decade from now. So we shall see. And Morgan Stanley came out with a report that Apple's going to have a small percentage, like 13% of the robotic market in the year 2040. And it was projecting only like 2% or less of penetration into worldwide households for full-fledged humanoid robots. That number seems a little bit low. I think it's going to be higher. I'm certain Elon thinks it's going to be higher. I also think that we're not accounting for all the business applications that this can be involved in. So there's going to be robots everywhere. People should probably start getting used to it. And they're going to be coming out next year. I mean, just Neo robot just got announced, and it can't necessarily do everything they're preaching it can do. So buyer beware. But it's going to be $20,000 and you can pre-order now. It says it can deliver at some point in 2026. My guess would be late 2026. So it can actually get the stuff done that it's claiming it can do. So very excited to see this robotic future. Very bullish on everything continuing to get better in our lives from robots and increase in GDP and AI helping us all out. So stay bullish, everyone. Stay on the front edge of technology. It's going to be a very fun ride. Thanks for tuning in to another incredible episode of Bullish and Beyond with Brian the Mac Man. Cheers.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps, and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.